Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, last week, ending December the 14th, it seemed like all CME products volatility went down last week. Basically, everything was soft, unchanged, or really much lower. Let's start off with the equity market. That's the one outlier, actually. The equity market was actually unchanged in volatility terms on the week. A little bit firmer in the NASDAQ, less firm in the Dow and the S&P 500, but by no means was volatility up. Crude oil, 1 month volatility down 1.4 points on the week. That's 25.9% volatility. Oil vols continues to go lower even today. Gold volatility last week down almost 1 full point, 1 month volatility down to 10.5%. Gold vol is also down again today. Now FX was pretty strange in that FX vol was down just a little bit. However, Japanese yen vol saw a 6-point increase in 1 month volatility. That's just about the biggest 1 week move Japanese yen vol has had. But what's more noteworthy is that most other volatilities within FX actually declined on the week. So really a mixed bag, but all in all, vols were unchanged. What stands out right now? There's a couple buts. One is that skew continues to go a little bit higher, and it did last week. But do keep in mind that equity skew is still trading in the 19th percentile as judged over the last year. Term structure continues to flatten. We see 1 to 3 month vol term going up just a little bit, but it is flattening. But the big but on this one is that term structure is trading in the 13th percentile as judged by the past year. Now, what's keeping volatility higher? What's keeping it lower? What's keeping all asset classes volatility where they are? Well, right now, the ceiling of volatility seems to be the continued downtrend in oil vol and gold vol. That's keeping a ceiling on most other asset volatilities. Now, on the other hand, the floor of volatility, what's keeping vol from going even lower than it is, seems to be the continued divergence between equity vol and index vol. We're seeing just the macro correlations continue to increase, to diverge. That's keeping volatility from going much lower than it is today. So what's driving volatility from this week coming out? Probably more of the same. We're seeing most asset class volatilities down today. Basically everything is down except for maybe NASDAQ vol, which is up just slightly, but all other asset classes are down. Again, we have earnings season kicking off with tech this week and the fiscal cliff. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.